Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and in this video we're going to look at whether intuition belongs in trading, if, when, and how to use it. Intuition, we'll talk about what it is, but I think we use it a lot more than we think because it's basically just our subconscious cumulative experience that's available in our mind, but that it's not always consciously acceptable or accessible. So it's used all the time. The other day I forgot one of my passwords and I couldn't think of it, but I just had to sit down and I put myself in front of the keyboard and my fingers knew what to do. And it was like, oh, okay. I just kind of stopped thinking about it, let myself just put myself in a place, put my fingers down, and my mind knew what to do, even though consciously I couldn't remember what it was. And that's the kind of thing that we're drawing on. We have all this information in our heads, but it's not always, right there for our conscious mind to accept. In an experiment, subjects were asked to pull cards from multiple rig stacks. Basically, there was a pattern to winning this game. And they had these subjects all wired up, similar to a lie detector test, so they could get feedback on what was going on in their mind, their skin, and the wiring indicated that people started picking up on a winning strategy after about 10 draws of the cards. But it took the subjects about 50 draws to actually start to realize, hey, I think I know what's going on here. But they could only state the pattern after 80 draws. So what does this tell us? Well, it tells us that in the end, we may know what we're doing if we actually, sit down and clearly write it out. But a lot of times we know what we're doing way before that, but we just don't trust it. And that's from that little study. It was talked about in Stephen Goldstein's great book, The Mental Game of Trading. And so it was a study conducted by Antonio Becerra, Antonio Damasio, Hannah Damasio, and Stephen Anderson. And there's a lot of work in intuition, and I would suggest that you explore that. I am not an expert in intuition. I'm a trader, and I'm interested in intuition and improving performance, so this is my take on it. But, as books like this discuss, and as the actual studies discuss, there's a lot of information out there which you can look at. And, if you're skeptical, look at both sides, whether it works, whether it doesn't. But I would ultimately encourage you, after you've watched this video, to take in what's been said and then try it out for yourself and ultimately see if it works for you. So intuition is what the mind picks up but can't be clearly stated yet. So there's an example of me, and I was a prop firm trader for many years, and I remember one time me and another guy next to me, we traded together a lot, studied together, built strategies together, and we were both in the same stock. And we'd buy some, and the stock was going up and it was pretty active, and we had big positions, and there was this just a pause in the action. It was like, and we both just looked at each other and we were like, oh shit, at the exact same time, and we both just started exiting. And it was based on just cumulative experiences of trades, and that's not something I could write down as a clear rule. If there's a 1 second pause in the price action, get out. But it was just something was off. And sure enough, even before we started selling, this thing just started dumping. And it was just, that moment where you're getting a sense of what's going on, and then all of a sudden something just changes. And so we can't always state those rules, and I think that's a problem for novice traders looking at someone who's more experienced. We'll talk about that. Is, they're picking up on these little subtle things which have a big impact to them, but the novice is like, what are you looking at? Like, how'd you know that? And it's like, I don't know if we can know it. We know it in the moment, and it's based on having seen some trades. And so it's like I can't put that rule in there to say if there's a 1 second pause or a 2 second pause. People want those kind of rules. They're always asking like, well, did you get out if it drops 1 cent or 2 cents, or if it doesn't do anything for 1 second, 2 seconds, 1 minute, 1 week, 2 weeks? And it's those rules I think can stifle your trading a little bit, because it's situational. There's no two patterns that are ever identical in the market, no two situations that are ever identical. Just like the old analogy, a river's never the same because it's always moving. So that same spot in the river, it's different every time you step into it. And trading kind of the same way. We might be trading the same pattern over and over, but that pattern is going to be slightly different. So our human mind can pick up on those things if we let it, whereas our conscious mind is always fighting for, well, how do I know? How do I know? Give me an exact, precise rule. And sometimes there aren't any. But we'll talk about that and how you can make the difference between performing well and how without intuition, and how intuition can kind of supercharge our performance if we let it. So humans, and especially traders, are taught to ignore intuition. You can agree with that if you want, or you can go through this, and I'm not saying you have to use intuition, but it can be an ally if we use it in a certain way. Let's get my face out of the way there. So does intuition belong in trading? Well, it's going to depend on a couple things. What is your experience level, and what style of trader are you? So intuition should require experience. It's based on an accumulated knowledge that isn't always accessible, but that we've done and we know. So the password example is a very simple one. It's like that knowledge is there somewhere in my head. It's not always accessible, and we might not always be able to grab it right when we need it, but it's there in our mind. And if we kind of let ourselves flow, then we can probably just strike our keys and figure it out. That repetition or whatever it is will trigger, and we'll be able to figure it out even without remembering it consciously. Traders who have seen many market moves, trades, conditions, are more likely to be able to use intuition than a novice. Because a novice, when we're first starting out, we might not have the knowledge we need to act on productively in the first place. We don't really know what we're doing. So just kind of going with our gut is a bad idea. And this is the debate, right? Should you use your gut or not? And there's people who say yes, and there are people who say no. And what I'm trying to rectify is, how can both of these things be true? And often the people who are saying they don't think you should use your gut may not have the experience level required to rely on their gut, or they might have the wrong style for using their gut, or they may have simply chose to be a certain style of trader that doesn't use intuition. So we'll get to that. But yeah, there's a pretty big debate on should you trust your gut or not, and that's what this video is about. When a way of trading has been found useful based on conscious observation, using intuition can result in super performance. So you can be a good trader, and I do recommend that you get results with your method before you start implementing intuition and kind of implementing this flow, which we'll talk about how we can start instilling this in our trading once we're ready. So automated traders have little use for intuition, except for maybe coming up with ideas. automated traders, they're watching the market, they study the market, they probably have a lot of background information in their head which they can use for coming up with ideas. And I've seen this with automated traders that I know. They're studying and looking at things and figuring out, like, okay, if I did this, maybe I should try this. That can be intuition as well, like using that culmination of knowledge. You might not know exactly what you have to do yet, but you have the idea, and then you can start fine-tuning it. Discretionary and rule-based discretionary traders, I should specify what those are. Discretionary means you don't really have a written down system. I see lots of these kind of traders online. It's like every trade's based on something else. It's like, oh, the RSI is doing this, so I'm doing this. I see some fundamental news, so I'm trading this stock based on fundamental. It's kind of, they're just pulling ideas and pulling up trades and kind of coming up for the reasons for those trades in the moment. They don't really have like a set system that they follow. I have met very, very, very few fully discretionary traders. What is most common is rule-based discretionary. That is what I consider myself, and most traders I know are rule-based discretionary. That means they do have a basic strategy that they follow, a basic system. So I have certain patterns that I like to trade, but I do have flexibility in, we'll talk about it, kind of what most people would consider like exceptions to the rules, or as conditions change, I can interject into my system. I do allow myself to use intuition, like we discussed in that moment when me and my trader friend both looked at each other and realized, like, uh-oh, and we started getting out. Even though we might not have been at the target price we wanted, we realized something was very wrong, and we started exiting. That is rule-based discretionary. And it can be used to supercharge performance once you've achieved success with what I would call consciously trading. So that's coming up with the ideas, whether you've one of my ideas for a strategy, or you've come up with your own, you're fine-tuning it, you've found success with it. I believe intuition can then take over and take you beyond. A good analogy of this is, I used to do Kung Fu. I was never very good, but when I was younger, I took classes and quite enjoyed it. And they teach you all these forms, kind of like katas in karate. I think that's what they're called in karate. And so you learn all these movements, and I often went during the day, so it was pretty quiet. Not a lot of students there, so I had a lot of more personal instruction. And so I'd go through these forms, and you're thinking about doing these forms, and you look very rigid. You're thinking about punching, and then you're thinking about kicking, and it's not very fluid. It looks very jagged. And then after like kind of a month or whatever of learning this form, they told me, like, you at some point have to stop thinking about it and just do it. And because otherwise you're always going to be this like jagged, and yeah, you're doing the movements, but you're not doing them as well as you potentially could. And I think that's the difference between great pianists, great musicians, and someone who's mechanically proficient, right? They've tapped into a sort of flow where now all of a sudden those movements look beautiful. You can think of ballet dancers, any type of dancer. Same with traders. Like it's we can be kind of cumbersome, and we can be really thinking about what we're doing. And this is actually what I teach. We'll talk about the process of like thinking through what you're doing and then getting to this kind of super performance flow state. But ballet dancers, any of these things, like if they just thought about the movements and they were thinking about the movements, it would look so mechanical. but it's the fact that they do it well, and then at some point they say, you know what, I know this and I'm just going to go with it, and all of a sudden those movements become much more fluid and they look way nicer because you're not stopping kind of every few seconds to think about it. So this is where we want to get to. We have to think through the steps, but then we can eventually step beyond that and move into intuition if we decide to do that, and if we're one of these trading styles, it's going to be more beneficial than any others. So the mind needs quality factors to consider, otherwise it will bounce around. So we're talking about how to move more toward intuitive type trading. And again, this is going to be a long process. So we need something to actually focus on. We need quality inputs into our decision making. So a strategy starts with an idea. We consider different entry, exit, and position sizing rules, and over time we can improve on those as we see more examples. I should point out that I do not believe that you need to go out and find a profitable method and then try to implement it yourself. My start came from simply looking at charts. I had no input. I hadn't read any trading books, and I simply looked at charts and tried to figure out how could I take advantage of some of these movements I was seeing. And then once I kind of got the idea that, okay, when there's a move up and then a pullback, if that pullback's, start to notice things, that if that pullback's pretty small, then it's usually followed by another move up. How can I capitalize on that? And so that idea is just a focal point, and then start looking at, okay, if I enter here, how does that work out? If I put a stop loss here, how does that work out? How should I be position sizing? And all that just comes together, and then it's maybe just looking at charts at first, trying out a few things, testing out on historical data, then moving to a demo account, trying some things out, then live trading with small positions. And we're just building this knowledge base, and it doesn't necessarily require reading hundreds of books or anything. So that's my view, and I do have lots of, you can see lots of trading books behind me. I enjoy reading them. I do take in some information and incorporate it if I think it'll be beneficial. But basically, we can start trading with just an idea, looking at our own results and our own trades and improving on those. And we can start to see some results. So the kind of like how I was thinking through my Kung Fu forms, and they were a little bit rigid, but still allowed me to learn the moves and become quite proficient, I guess, at what I was trying to do. That's similar to commentating while I trade. And this is a method I teach, and I highly recommend it, and I still do use it when I kind of need to focus on certain things. So commentating is talking through the elements related to your strategy on a given trade. So what that might look like is, if I'm day trading the Euro USD, I'm talking about variables that are important to me. So is there enough volatility? And I'm just constantly talking to myself through the whole time I'm trading. And I'm asking myself, is there enough volatility? How strong was that price move? Is there any whipsawing going on, which would make it easier for me to get stopped out, because then I don't want to trade? Are we close to some highs or lows? Is there enough room for us to reach there with a decent risk reward? Those levels can often cause a bit of we sometimes pop through them, but then they can cause quick reversals. So I want some room there to be able to trade. I like to see momentum. Was there momentum coming into a pattern that I'm trading, or was it pretty flat? Was the price action choppy? So I'm just going through a list of things that, going back to this, we started out with an idea, and then we keep building on it, and we notice things that help improve performance or maybe detract from performance. And so I'm commentating on those things, just making myself aware I'm also saying, to myself, to avoid impulsive trades, I'm saying things like, it's really choppy right now. I'm not going to trade until we start to see bigger movement. Bigger movement would look like we need to at least see X amount in the next, few minutes. We'd need to see at least a 10 pip or 5 pip price move, whatever I kind of need to get the ball rolling. So I'm talking through what would need to happen to trade, which helps me stay out of bad trades when conditions are not good, and when conditions are good, I'm talking through that and saying conditions are really good right now. This is why I'm trading. Because you have a lot of time to sit there and talk. So I'll also talk through like what would turn conditions bad, and that kind of preps me for maybe stopping trading or not taking a trade once I start to notice some of those conditions develop, such as what I just talked about. It's getting a little bit more choppy. The moves are getting smaller. The risk rewards are getting worse because the movement's getting smaller. So now I'm going to back off, and I'm just talking through this the whole time. But in between trades, while I'm in trades, I'm talking through it, trying to keep myself on my plan. So that's what commentating is. So over time, if you commentate for, this used to say over years, but I don't think it's years, because at the firm, I'm sitting right with people, and we started to get an intuitive sense, I would say, within, we're starting to get profitable, most of us around the 6-month mark. I know that's controversial, but to be honest, if you didn't make it quickly, you were just cut and someone else would come in to take your place at the firm. So it's like, you make money or you die. So 6 months was kind of the benchmark where you had to be profitable by. So they're profitable, and then kind of over the next 6 months to a year, that's when traders usually would really kind of start to flourish and find their groove, and they'd start to be developing some intuition by that point. But recall, we were also at the office all day every day, kind of like a full-time job. So, we were looking at charts, studying, talking things over. We were immersed in it, right? Like a huge amount of experience in a short amount of time. If someone's at home trading for an hour a day and that's the only work they put into trading, developing that experience that, we would have accumulated in a year is probably going to take them 2 or 3 years. So over time, for some people, it may be a year. Other people, it might be multiple years, where all of a sudden all that experience starts to become accounted for, and we know it like it's in our brain. We don't need to kind of keep talking it through with our conscious mind, kind of like the kung fu forms. Eventually, at some point, you just have to let your arms and legs fly, as opposed to, okay, I got to punch right now and it's real slow, and our conscious mind isn't quite as fast. So we can stop the commentating and enter into a zone state where we let the subconscious take the reins. We will be able to react quicker and potentially make better judgment calls than what the lower logical mind can do. Shifting conditions are sensed. It's not magic. It can look like magic, but it's not. It's just experience. And we're sensing those shifting conditions, and we can adapt to them. One of the earlier experiences of this was, I started day trading in 2005, and relatively calm conditions. Let's see if I can pull up a chart here. Yeah, okay, we can see that. So I started day trading here, and this is, so we're going to look at this indicator here. So this is simply how much the S&P 500 moves in a day in terms of percent. So 2005, we can see it's fairly calm. You have, days are mostly contained between like 1.5% to the upside and let's say 1% to the downside, maybe 1.5%. A couple little bit bigger days. But throughout this entire time, it's like a 2% down day was really big, and a 1.5 to 2% up day was really big. And then all of a sudden you get over here to 2008. Now, I've been trading in these types of conditions for a long time. And then all of a sudden, if the S&P is moving this much, you can imagine how much individual stocks are moving. It gets really crazy over here in late 2008 when you can see like the S&P has days where it's dropping 9%. Think about individual stocks, how much they'd be moving. So I'm used to trading stocks and the S&P at, the S&P is moving 1 or 2%. Maybe stocks are moving, big moving stocks are moving kind of 5 to 10%. And then all of a sudden you have the S&P moving 10%, and you're going to have like some of these financial stocks and just basically everything moving probably 20 or 30% a day on some individual stocks. Like just crazy movement. So intuition allows you to move from this environment to this environment, and 2008 probably one of my best years, simply because we had bigger movement. It allows you to capitalize. If I was in my conscious mind too much, I probably wouldn't have been able to adapt. I would have sat back and said like, oh no, I don't know how to trade in these conditions. This is too crazy. But the fact is, the patterns were all the same. It's just everything looked a bit different because it was on a bigger scale. But by kind of allowing the subconscious and saying like, okay, I know what I'm doing here, I can see the patterns, I'm try to get into my zone, let my subconscious take over. It knows the strategies, right? It knows the strategy. It's gone through this whole process of talking through every single trade for many months or years. And now, it knows the price movements. It knows what we have to do. We are going to make some conscious adjustments, like, okay, movements are way bigger, so my position size is going to drop. And, we can still use our conscious mind for sure, but we can be on things much quicker on those moves. Sometimes, if you're day trading or even swing trading, like moves happen so fast. And if we try to get too much confirmation from our brain, we miss the opportunity. Whereas we had that, like, man, I got to get into this. And we hesitate and it's gone, right? So trading's about being able to take advantage when we have that. We still want to prime our mind and body with a pre-trade routine. I'm a big advocate of this. Now, the pre-trade routine can be anything you want to try to get you into a good state for trading. So if you're still in the commentating stage, which is 95% of traders probably are in this area, we want to, maybe write down a few things that we need to commentate on, mistakes that have been happening that we need to control or monitor. And as we move more into the intuitive state, we want to have more a pre-trade routine that helps us get into that into that more in the zone type mind frame. So that can include some, meditation, letting go, watching thoughts pass by through our mind without getting attached to them, and more meditation type exercises, which help create this more in the zone state. But we still want to create that before trading, because if we just jump in to trading every morning or afternoon or wherever you trade, we may not be in the right state for that. We might be agitated from something that went on during the day. So we want to create the best sort of state for our body and mind to be able to either commentate if we're at that stage, or be more in that in the zone state if that's where we're at with our experience level. So intuition is a good idea for the skilled trader, bad idea for the novice. Why is that? Well, we'll get to that in just a second. When novice traders watch skilled traders, it can look like they're making on-the-fly decision. Skilled traders seem to have exceptions for their rules, and that's simply because we can't always explain everything, right? That example with the me and my friend both looking at each other when we knew we had to get out. And there's oftentimes I'll be trading a currency and I'll post a chart, and the price is like in real time. I'm watching it flutter like right by my target. So I'm thinking in that moment, like, okay, if it's right by my target, but it's not. You can kind of see this like hesitation there, right? Like the buyers push it up, but then they kind of get knocked back, and it pops up, and I'm talking about like the micro movement right around my target. So I'm on side, I'm making money, but it's just fluttering by my target. And this is like where that intuition can kick in, where it's, do I get out and take almost all my profit, or do I wait for that target, or do I just leave it totally alone and risk the price going all the way back? So I'm watching those tiny micro movements, and if they're kind of pushing up, I might feel okay. But if I start to notice like it pushes up and then has a little bit bigger drop, and then the next push up is a tiny bit smaller. Now again, this is all occurring with inside like one candle usually. So it's very hard to even write down on a chart like what went on in that maybe 5 seconds, but I'm seeing it in real time, and I'm using that information, and that's when I may decide like I'm getting out. Like I don't like that. There was like it looked like the buyers were not able to get my target and they're losing a bit of steam. I'm getting out. So on my chart I draw a little red line where I got out, and it's super confusing to some people who are like, well, the target was right there, why didn't you wait for it? How'd you decide to get out right then? But it's, we're taking in information every single second that we're watching our trade. And so to me, it's not an exception to the rule. It's just I have a rule where I'm allowed to get out if it's near the target, and it seems to be hovering there. But within that hovering are loads of things that my brain's picking up on, but which would take 100 pages to write down what I'm seeing and thinking, right? So I say if it gets near the target and it's not quite hitting it, I get out. But yeah, if we were to put bullet points under that, there'd probably be like 100 bullet points, that all those little things I'm looking at, and those are the accumulated knowledge. So it seems like I'm making an on-the-fly decision, but it's really not. While it is in the sense that I'm taking in the information as I see it, I'm still following my overall strategy, but I have leeway and I have exceptions to my rules. And that's because I allow that sort of intuition to come in. So being in the flow, I know many great traders who can't really articulate how they make money because they've had no reason to do it. It's been a very interesting experience because I was originally only a trader, and then I started writing. People started asking like, well, how do you do this? How do you do that? How do you do this? Like family, friends, things like that. So that's how kind of the website started, and all these, I had another website way before, and then decided not to do it anymore, and then started this one again because the questions just keep coming and I don't want to answer them one by one. So it's like if I can put out information. But it's been a real interesting experience because there's a lot of things that, even writing a course, I try to think through, like I just trade the way I trade, and then I'm thinking about how do I explain it to someone else in language they might understand, because sometimes the language in our head, we kind of use acronyms, or we know what a word means to ourselves, but they might not know what it means, like a thrust. I know exactly what a thrust means in terms of a price move, but someone else might not know what it is. So then I have to explain it, and then, there's something lost in translation there where they're like, well, okay, if it goes up so much percent, is it a thrust, or is it only if it goes up more than that? And I'm kind of like, well, yeah, it's more visual. Like if it looks like a big move, that's a thrust to me. So it's been very interesting going through the kind of teaching phase, because now I'm forced to articulate things which I never had to articulate before, and people constantly are asking like things that I've been doing for years, but which I'm almost not even aware of until someone asks me. Like, that thing, like, why'd you get out of that trade early before your target? And I'm just like, oh, well, because this and this and this happened. And they're like, oh, okay, well, did you say that anywhere? And I'm like, well, it's built into, these kind of rules, but it, to someone else, it's just so much information, and yeah, so it's very interesting, and this is where this kind of intuitive thing creeps in. So they can't explain always what they're looking for. Yeah, I know some really, really great traders who probably, if you ask them to write down their method, would be at a loss, because they're like, there's just so much to explain about what I look at. Like, how would I even write that all down? But to them, it's just like, because they've gone through this process, right? They've come up with the strategy, they've built it up, they've looked at different ways to do it. So they've gone through the process of building up that strategy, so it's nothing for them to think of it, but someone else learning it could seem like a lot. So this is fine for people who have honed their craft using this kind of intuitive, having exceptions to the rules, making these kind of on-the-fly decisions. It's fine for people who have honed their craft. They are at stage 4, but using intuition is a training disaster before stage 4. So this is, most traders, well, everyone will fall into one of these 4 categories. So stage 1, the most dangerous, because this is when you learn to trade a little bit, but you're not yet aware of what you don't know. You aren't aware of the risks. You aren't aware that an earnings announcement could drop the stock 60% and you're leveraged, and you could end up with a huge bill coming to you from the broker because you owe them money. You're unaware that a big news event in Forex could wipe out your account and then some in a second. Conscious incompetence is now, you've learned enough to go like, wow, I know nothing. Like, I need to learn, and I need to get better at what I'm doing. Conscious competence, now we know what we know. This is the commentating stage. This is the form of your karate form or your kung fu form, or you've learned a new dance, you're a ballet dancer, you've learned a new ditty on the piano, you can do it mechanically, you're proficient, but it's not beautiful, it's not flowing yet. And unconscious incompetence is where you don't even need to think about something. A quick version of this you can think of is driving a car. When you first get into the car and you're learning how to drive, it seems like there's so much. You gotta, like, oh, my blinker's here, where are my washer, like, where's even the, you sometimes think you're gonna mix up the brake and the gas. You don't know where to stop. There's, lights everywhere, pedestrians walking. It seems like it's just crazy chaos. At least it was for me, living in a big city, learning to drive. And then, well, probably not a big city compared to what, people in New York or something would have to deal with. But and then you eventually move to the state where it's just totally second nature. You're not thinking about every action you do while you drive. That would actually probably make you a worse driver, right? Because if you're constantly fretting about thinking like, okay, I'm going to put my foot on the gas and I'm going to turn the wheel this way, it'd just be, you're probably driving down the street way slower than the speed limit, or thinking I need to follow the speed limit. It'd be very hard mentally, and also, not so good for those around you. So that's a good example of like a quick transition where you go from kind of being in a chaos state of learning how to drive to a pretty quick, now most of us who have been driving for years, where it's like we don't even really think about anything. We're daydreaming, we're thinking about whatever. We don't even have to look at a stoplight and think, oh, I have to stop. It's just, our mind catches that the light's red and we just slowly slow down. It's unconscious. We are in a more intuitive state as opposed to having to think ourselves through every action. So is it required? No. Is it useful? Yes. Acting on intuition requires letting go. The conscious mind may freeze if it doesn't know exactly what to do. The experienced and subconscious mind can find ways to capitalize or avoid danger. So that kind of transition from slower moving markets to 2008, where all of a sudden it was chaotic. Luckily, I had developed quite a number of years of experience up to that point, at least a few years of experience. So there were times I remember thinking like, wow, this is huge and I don't know what to do. But then also kind of being in this state of, if you kind of get rid of that logical mind a little bit and you let your experience take over and kind of say like, hey, you know what, we got this. This is the same pattern we used to trade. It's just bigger. We're going to reduce our position size. Let's go. We're taking in all that information, noticing that price waves are bigger. So, some of those pullbacks that used to only be, 5 or 10 cents in a stock we were trading, now all of a sudden might be 50 cents. We're taking that in, we're registering it, and we're saying, you know what, it's okay. It's all relative, and we're just going to trade based on what we know. This is difficult for many people because, like what I just said, we're going to trade on what we know. There's a difference between what the conscious mind knows and what the subconscious mind knows. We have to allow ourselves to tap into that sort of reservoir of knowledge. But our conscious mind, our logical mind, doesn't always love doing that. The ego maybe likes to be involved. It wants to come up with reasons for the decisions to kind of feed its own ego, its own existence. And kind of letting go goes against all that. So it is something we need to work on in and of itself. It's not a requirement. You can trade systematically, you can trade automated, or you can just continue to enhance your discretionary trading system and trade it via conscious protocols such as commentating, just looking at charts, making it more systematic. If I get in here, I get out there, that's it. Use a trailing stop loss. None of this like what Corey does. If he notices something weird, he's getting out of trades early. That's not for everyone. Most of us could be intuitive if we learn a great deal about a subject matter or have accumulated experience. There's a lot of people who are intuitive already in certain areas without really noticing it. I notice this, like sometimes you'll meet a farmer or something, and I'll be chatting with him, and all of a sudden he's like, "Oh, storm's coming." And I'm like, "What?" And no, I was golfing with this guy, and he was a farmer, and the wind just kind of changed in a certain way, and he's like, you can feel it. The wind just shifted there. We got this going on over here, and he wasn't a meteorologist or anything, but he just he could just feel by the way the wind kind of changed, and then he started looking for other signs to say, hey, maybe a storm's coming. Sure enough, within we had about a few holes to go, and we were hit by a massive storm, and hadn't been on my forecast for the day when I looked out because I was out golfing. So yeah, very interesting things. So we have these things, and a lot of us have it, like I talked about with the driving is just one example. There's probably a lot of things that you just do automatically. The passwords, because another one, like you're used to typing them. And so we have this area. If we start to notice them, we can draw on them. Trading can get to that same point where it's just we're in the zone. We're at stage 4, unconscious competence. So that's all I got. I hope you got something out of that. Leave comments if you've looked at intuition, whether it's positively or negatively affected your trading. It'll be also interesting to see like what style of trading you are, and whether if you receive success before or after using it. If you used intuition maybe you're struggling and you started using intuition and you did better, or you were already successful, used intuition to improve your performance, or maybe it made it worse. That'd be really interesting to hear because everyone's experience is different. I do like Stephen Goldstein's book, Mastering the Mental Game of Trading, because he talks about, lots of different trading styles of people he's worked with over the years, and there is a little section on there in intuition. I wanted to expand on it based on my own experience and traders I've worked with and traders I've traded with. Take what you like, leave the rest. This is your trading journey. I try to instill that you do not need to trade exactly the way I trade or the exact same way someone else trades. As we discussed in the video, you can pick an idea and make it profitable. If you like an idea, you just keep refining your entries, stop losses, targets, as long as it's based on somewhat reasonable. You're trying to capture some movement. How does that movement occur? You can find ways to capitalize on it. You do not need to read 2 million pages of trading information to be able to trade. And in fact, it may even be detrimental. Experience, especially focused experience, is what allows us to develop intuition more quickly. If we really learn our own specific method very well, we can get to that more intuitive stage, which will make us quicker, more adaptable. As opposed to, if we try to learn everything, we're never going to be very experienced at anything. So it's going to be much harder to be intuitive as a generalist of trading. That's a good point. Probably should have put that in there. But that's why we want to be, focusing on a couple strategy ideas and really zeroing in on those, because we're gonna create a lot of experience in that. We're commentating on those specific types of trades. That creates, a repertoire in our brain of tactics and ways to adapt, which we might not be consciously aware of. Whereas, if we're just studying a whole bunch of different things and a whole bunch of different indicators, then we're not really gaining experience in a lot of that. We just have like a tiny bit of knowledge in a whole bunch of areas, as opposed to a huge amount of knowledge in a very focused amount of area. So you're probably not going to be able to get that supercharged, intuitive type performance if you're a generalist. You want to be a specialist. Focus in on a couple strategies, get very good at them. So there's lots of resources on TradeThatSwing.com. You can check that out. If you like the video, please like it and share it. Subscribe to see more content like this. And best wishes in your trading.